Hey, what's up out there? It's Dave Duford here at Final Expense Agent Mentor at feagentmentor.com, where I help agents like you succeed in selling. And as the topic of today's video is not only selling, but also keeping the business that you sell. So what we're going to be talking about today is how to keep a quality book of business on the books. I learned early on, especially this is really important if you're a brand new agent or you're looking to get into sales. All you experienced guys who listen to my stuff know what I say is to be true. And it's not about what you sell in this business, it's about what you keep. And when you sell an insurance policy, the reality of what we do in the insurance game is that we're trying to sell a policy that people actually keep, right? We're not a drive-by salesperson in the sense that if we sell vacuums or we sell a car, that as long as we can get past the initial 2 or 3 day Attorney General mandated refund provision in the car or the product we're purchasing, we're not in the clear as insurance agents until at least 9 months in many cases where the advance commission we receive has been actually paid in by the client. So there has to be some careful thought put into what you're selling and how you sell. And that's the purpose of today's program, because I think it's really important that you guys understand that your mission in life is to obviously make a living first of all, but as a close second, it's also to sell and keep policies on the books so that your clients can ultimately one day reap the rewards. I guess maybe they are not necessarily reaping it because they're dying if you're selling them a life insurance policy, but at least their family will reap the rewards of the prudent and sound decision that you help them make. One of the things not talked about in the insurance business is that there are loads of people that get into this business that are very productive, that sell a lot of insurance. But what you don't see promoted by the marketing organizations are the numbers that actually fail out, but then also have a lot of chargebacks, that have a lot of people that cancel. And this, in many ways, can lead to the demise of many very good salespeople that were unfortunately too hard and heavy in the selling process. Let me give you a couple of examples. So I remember talking to one guy out of Knoxville, and he worked with a pretty large final expense organization. And their top producer was out of the Knoxville area, and he was the top in production for the year. But also, he was the top in chargebacks and lapses and cancellations. And what ended up happening is that he came from the car business, went into final expense sales, and then a year and a half later went back into management in the car business. And the reason that he failed the business invariably is because probably number one, he didn't know how to manage his money. It's a totally different video. A lot of people are great at making money, but they sure as hell can't keep it. A different skill set altogether. But then number two is that he just wasn't good at keeping or selling the right kind of policy to his clients. He pushed for the higher size policies. He pushed to convert as many people as he could possible, which is in a sense what we want to do up to a certain point. And so a lot of these people just reneged on their deals. They decided it was too expensive, it was too much. And that money that he made really wasn't made. You see, that's called a chargeback. You're loaned money when you sell a life deal or a Medicare deal or pretty much any deals that are out there. And it's contingent upon you keeping that policy on the books to have that loan in place. But once you start losing deals, especially beyond the expectation for whatever your product is, and each product has certain levels of what we call persistency, meaning the measure of quality of business that your average piece of business stays on the books. Once it drops below that threshold and into the red zone, you'll find that you're knee deep in debt, and a lot of people just can't make money because they owe so much money. So this is a little thing that a lot of people don't talk about. It's very real. And so that's why I make strides as much as possible to train agents how to sell effectively. Because people change their minds. People have buyer's remorse. In final expense, when I teach agents, I say, look, you can hard sell Mildred But Mildred's got 270 days to wake up the next morning and decide not to keep her commitment to you. So you have to really think about that. Plus, couple that together, somebody else may come in and sell something better. So it brings up all these different variables as to how you would approach selling when you really know that you're on the hook for a really long time. And you've got to overcome that by making sound decisions to make sure whatever it is that you're selling actually stays on the books like you want it to, and so that you profit, and as well as your company you work with profits, and as well as your client. Because there is no business in selling life insurance when you can't keep it on books, right? You know, what's the point of that? If it doesn't stay on the books, then nobody wins, really, at the end of the day. So that's the reason I'm doing this video. I want to help you guys who especially are new or maybe you're experiencing chargebacks. I want to give you some tips to help you keep this business on the books so that you can have better qualified, better satisfied clients, and you can be more satisfied in regards, in response to that as well. So a couple of things just to make sure for you new guys that are watching. The big word I'm going to be using here is persistency. That's an insurance lingo word. All that means is how well does your policy stay on the books. So usually in insurance sales, you have several different metrics that the insurance company tracks. The first one is first-year persistency, or 13-month persistency, and that is a ratio of how many policies that are issued, meaning that they are issued, issued, over how many policies actually are on the books at that 13-month period of time. And then there's also a 37-month persistency, so that's a 3-year mark. The big number that insurance companies push for is the first-year mark, because that tells you a lot about how the agent is selling. And it depends on the product you're selling. Some products are naturally more persistent than others. Pre-need burial insurance that you buy from the funeral home is incredible persistency. It's well in the upper 90s. People who buy a pre-need plan rarely ever cancel it because they feel really strongly about putting out that kind of money to basically guarantee what they're going to get and the items they're going to get in the funeral. Final expense being that we sell more of a lower income. It usually is lower depending on the company, their metrics, the company metrics. Mine are a little bit higher standards, but 70% many times is the cutoff, 75%. That can vary, though, depending on the company. I think you can get more like 80 to 85% if you sell right, which I'm going to teach that momentarily. Medicare supplements usually are much higher, above 90%. I have people who say they never have people who lapse on their Medicare supplement, which is great. So mortgage protection in that arena, too, as well. So you have to understand what your persistency number is, and you want to do everything as much as possible for whatever it is that you're selling to influence that those sales that you make are going to be better than the average. You want to be a better than average agent. And so what I'm going to teach are these 5 tips, I think, based on my experience selling insurance and training other agents as well, have really helped solidify and improve the quality of business that they're able to write. And in exchange, it helps you stay in the business longer. You'll go back and sell more insurance to these people, and they'll continue to refer more referrals to you. So let's start with the first thing. And that is, your goal should be, when you sit down with your prospect, is to do whatever it takes to make them a client. I learned this from, I think, an insurance forum called Top Gun Producers. Great forum, by the way. Very good. And there was a thread on there, and the concept that was shared with me at that point, which was, you don't need, this was in reference to the eternal argument of is term better than whole life? What should you sell your policy? And if you get involved, if you read any threads on the internet and forums, or if you get on YouTube channels, or if you get on Dave Ramsey videos, let's say, you'll have people constantly bickering back and forth, especially if you're sitting across the table from a Primerica rep, let's say. And there'll be these battles about term insurance is better because of ABC, or whole life insurance is better because of XYZ. And nobody ever gets to the conclusion because there's essentially, in some cases, not all, in some cases, a cult-like approach to these products, that there's this one product and it's the only product that ever should be considered, and why anybody would consider anything else is stupid. It's almost just like blinders are put on. and people just, it's almost like a political argument. It's just pointless to even have it because nobody's ever going to actually grow from it and gain perspective. So I say this because if you take that mentality into the home where you're helping a client, if you begin to project your opinions on the client, which you should to an extent, but if you do it to the point where you're pushing hard enough to recommend something that may be against their personal values or principles, it's likely that if you do persuade them to buy a policy, and this is assuming you're on the first call and this is the first time you've ever met the person, you're making the sale to them, you may be at risk to lose the sale. My experience has been when you sit with a prospect, they're going to have a value system, they're going to have principles, they're going to have a thought process that's unique to everybody else. And if you present a solution and push hard for them to buy it that is against their value set, whatever that is, it's likely that people tend to revert to the mean. Meaning you may be able to influence them slightly against what they know, quote unquote, to be true. But as time progresses and things move on, they're going to shift back to their normal behavioral patterns of thinking. And eventually, ultimately, whether it's the induction of another agent in the home or whether it's just through their own thinking and thought process, they're not going to be sold on your policy. So what I believe you should do is that you should sit down with your prospect, do a fact finder, get to know what they want to accomplish, and sell them something that they want, okay? It doesn't matter if you really think they need term life insurance, but by God, whole life is all they think about. It's because their grandma had whole life, the insurance man came over, grandma always said buy whole life insurance, and grandma's never done me wrong, I want whole life insurance. Even though you think and rationally believe that term life is the best solution to fully protect the mortgage and leave an income replacement behind, you're probably not going to sell the policy, and if you do, you're probably going to lose that out to somebody who actually does what they want, does with a prospect. They sell the prospect what he wants. So the conclusion here, ladies and gentlemen, is that if you just focus on selling them what they want and you convert them to a client, then you have your foot in the door to ultimately transition these people into believers in what it is that you believe in. I believe that the first sale is the most important because it gets you inside the door. And then you can begin to influence your client maybe on a different way of thinking or on a different approach that maybe ultimately is a better solution. But you're not going to get that if you apply pressure and force their hand in a direction that they're not ready to go forward to yet. So, and plus, you're just not going to make the sale. I mean, look, you want to make a sale, make the sale. It's there for the taking. And when you sell like this, when you sell them what they want, if you just focus on selling them something that makes them a client, then ultimately, you're going to keep more of that business on the books. So if we look at, say, final expense, the way we do it in final expense, it's not so much of a product type as it is a product that fits their budget. So I don't care if my client, all they want to spend is $20 a month. I just want to make them a client. I've been around in the final expense business to know well enough that if I just make them a client, I know that there's a pretty high likelihood if I stay in touch with them through mailers or phone calls, that when the time is right over the next year or two, they probably are going to buy another policy from me. So, but I'd rather get my foot in the door and make the sale now than oversell them and then have them wake up for the next 6 months feeling really bad about this and then canceling it. And what if they die and they don't have anything whatsoever? So I'm just interested in making them a believer in me, that they're sold on me because I did the right thing by them. Given enough time and enough follow-up, just staying in touch, nothing extreme. When the opportunity arises to sell more insurance, I'll be right there to do it. Again, I've done this time and time again, and I recommend you to do that as well, no matter what it is that you're selling. It doesn't matter if you're selling mortgage protection, selling a Medicare supplement, and whether it is you're going to sell something else on top of that later on. The first sale is always the important one to make them a customer, and if you sell it the right way and they appreciate what they do, what a lot of people do is they get something, in a sense they're thinking, well, I'm going to try this out, he did a good job of selling me. Well, after a year or two, they're happy with it. They have no qualms about it. And they're now open-minded to maybe other things that you have to offer because you stuck by your word. You did what you were supposed to do, and so did the insurance. So now you have the ability to go back and sell more or bigger plans Again, I've done this 100 times. It's great. That's what's great about the insurance business is don't pass up the opportunity because of, a zealous belief in one particular product to make somebody a client. And at the end of the day, it's better if somebody's insured than if they're not, okay? Even if it's a $50,000 whole life plan when it could have been a $500,000 term life plan, and they really need term insurance, and I'd probably agree with you they need term insurance. I'd rather them have 50 grand versus zero, right? Because that's ultimately what would happen. So make them a client. Focus on making them a client first, and a lot of this other stuff will follow as well. So in and of that self, kind of sort of related to that, of course, is selling the need versus selling the want. Now, there's a lot of talk in this business, or a lot of talk in sales about you got to massage the greed gland of your client. When you're selling, you have to appeal to their need. When we go to, if I were to go buy a vehicle, I want to buy a vehicle that meets what I want out of it. Because what I need is just something reliable to take me from point A to point B. But I may spend double because I can, but I don't necessarily need to. So there's some truth to that in all sales, and certainly to some extent in insurance. However, I think it's important to also establish what the necessity is for the client and what it is that they want to accomplish. That's why I do a lot of pre-qualifying. If you've listened to my earlier videos, I talked about it. Yesterday was about my closing strategies for insurance agents. I do a lot of pre-qualifying. That's step 2 of my 4-part sales process I teach. I believe pre-qualifying helps establish what the need is. And many times in insurance, I think the product of itself is unique, especially life insurance, because it is something that the need itself can create urgency and desire. When you pose disturbing questions, what happens, you're not insured today, what happens tomorrow if you die? And you'll be able to establish and bring out the need that's already there and begin to develop that urgency and desire in the client to get them the policy that they really want, or to get the solution they want, which is to protect the people they love in their life. So I think establishing need and selling on a need basis first is important, at least in the presentation and when you close them. I think when you pre-qualify, you get to fact find, you get to see what they think, what is most important and what they want, but you also get to establish through that questioning process what is it that they want to accomplish, what is it that they need to accomplish with the basic plan. But then you can go into the selling process and then show them what I teach is an alternative sale close, which is a good, better, best close, where maybe the good close is the base need, but then the better and the best plan are maybe more coverage options. Maybe you add in some living benefits on the plan. Maybe if you sell Medicare, I wouldn't necessarily think of it this way, but if you sell a supplement, you sell them a G or an N, a G or an F. That kind of follows a good, better, best. I don't think it's exactly perfect, but it's an increasing level of benefit, arguably on some level, and it shows a differentiation between a basic plan and then an improved plan with better benefits. So I recommend when you present something that you show the need first. You develop the need because that's going to develop the urge and the desire to want to solve the need. But then you also add and stack on different benefits on a better, and not just on the good, but the better and the best options as well when you ask for the sale to improve or at least just show an option for a better quality plan that maybe fills more of their desire to have more money for the people they leave behind, or a better type of plan to provide more benefits. Point number 3 here is premium collection techniques. So this is pretty important in the sense that on several different levels. So when I say premium collection techniques, if we look at just senior markets, the strategy best employed is that if you do a bank draft, you always want a bank draft on the actual date the insured receives their money, or the closest you can to that draft date. This is especially true with final expense. It's, I would say, absolutely critical. As you get into better products in the sense of a higher quality client that has more disposable income, that is less important, but it's still important. So you want to time up premium drafts when it's closest to a deposit date, whether they work or whether they're retired and receive some kind of pension from the government. Also, if you're selling mortgage protection or if you're selling a middle market or above, even business owners, one thing you want to do is ask for an annual premium. One thing you'll just, again, it comes down to the assumptive close. When you show them an annual premium, let's say you're selling a business owner and you're selling them a term insurance plan, just some basic term plan, show them an annual premium. And if they balk at it or don't like the idea of it, they say it's too expensive, well, then you can back up and then sell them a semi-annual or a quarterly. One reason you want to do this, of course, is just to maximize your commission pay home or takeout so that you get paid on the full deal and it's all collected. And again, the more invested somebody is with a payment into the plan, the better the persistency is going to be as well. So payment collection, to an extent, is pretty important to keeping a quality book of business on the books, especially if you're selling a fixed income type of client. So be very sensitive to selling on and setting up payments close or on the exact date of the draft dates, just to give you the best ability to keep business on the books. The inverse of this would be to sell several days before they get their check. Again, some people who are on a fixed income just are in a position where they're not going to have money near the end of the month or have very low amounts. And if something comes up and they got to draw out of it, even if they've got money but they've got it set aside in a savings or something, a money market account or something other than their regular checking account, you can be inviting problems to happen that don't necessarily have to if you set it up close to the draft date. Number 4, this point to discuss here is should you personally deliver your client's policy? So I talked about this briefly on the closing video about what to do about closing your business and how to handle policy delivery. So there's 2 different schools of thought here. The first thought is that when you deliver your policy, it gives you an extra opportunity to ask for referrals, to solidify the sale, and then further cement the relationship. Because again, a lot of you guys that are getting started out there, you're selling to people you've never saw before. These are brand new people. And if you think long term, and this is very wise to do in all sorts of insurance sales, is this is just the first sale you're going to make of them. So if you assume you're going to sell these people 2, 3, 4 policies in the next 10 years, and they're going to refer to you a couple of people, how would you treat that sale differently? Well, that's where a policy delivery would make a lot of sense, right? Because it gives you another at-bat, another face time, and it gives you another opportunity to cement that process to go into that direction, but then also to ask for referrals. It also differentiates you from most agents because most agents don't deliver the policy. They just have it sent directly from the company, and that's that. But the other option is just to have the policy, of course, sent from the company. The rationale behind that is that if you focus on activity and you focus on presentations with new people, you're going to get more opportunities to make sales, to continue sales, and really just increase basically your production revenue. So here's my perspective on the should you deliver your policy versus should you not. What really it comes down to is what kind of product sale or what type of insurance environment are you in? Are you in an environment to where you're selling somebody that will be a center of influence to you? That will buy more insurance and different kinds of insurance from you? Are there other opportunities with this particular client? Because some of the best agents out there, they're not necessarily cold calling constantly. That's not their main source for business. If you look at John Savage, if you want to buy great books on insurance sales training, John Savage is fantastic. He would call his clients, I believe at the end of the year or the beginning of the year, and he would set up his first 3, 4, 5 months just on policy reviews with everybody. And he got a vast majority of these people to come in, sit with them, review their financial planning. That was his total financial planning approach, I think was the name. He doned on it. And but it would bring up just natural opportunities to make more sales. And in his mind, it was easier to just sell more insurance to people who were already in a relationship with him, and they liked him, they trusted him, they've already bought from him. New opportunities approach. People make more money. People have new needs pop up. And so this method is timeless in the insurance business. And that's where I think but it's funny, I actually think, now that I think of it, John did not deliver his policies. He had them sent, I think, from the office, and I think a secretary would call up and just tell him it was coming, but John never personally delivered them. but he still made the effort to make a relationship, and I think that's the important point to distinguish between having and considering doing a policy review or policy delivery. Is this client you're seeing now? Are you in an insurance product where you can see that 10 years, and you got to see that far, 10 years down the line, there could be other opportunities for life sales, Medicare supplement sales, health insurance sales? Are there referral opportunities? Maybe these people have money that you could help with annuities. Maybe there's dental and vision plan opportunities. If you see opportunities like these in the kind of products that you're selling, then I think it's a worthy endeavor to take a day out of your 5-day work week and plan to deliver policies and then solicit referrals from these people, develop a relationship with them, and check up on them every once in a while, because you will sell more of them. That's one piece of advice I wish I got early on, even in the final expense arena, in the sense that final expense is usually a one-call close and you're selling one product, but there really is a lot of opportunity for other sales even with a final expense prospect, namely Medicare Advantage, definitely some Medicare supplements in that, even annuities. And so this is the kind of stuff that's out there if you'll just ask for it and look for it. And you should maybe not necessarily jump in and try to do all that immediately, but if you think longer term and you connect with these people, you're going to do a lot more than 95% of the agents out there. So if there ever is that opportunity, and there really is, you'll be back in the home to sell them more insurance. And I can tell you this business is a lot of fun when you're selling people you've already got a relationship with. It's a totally different feel than going cold, trying to develop a book of business that way. So as you can tell, I'm a pretty big advocate of policy delivery, and something I wish I would have done as a field agent earlier on. I think it would have yielded me a lot more opportunities, but unfortunately it just wasn't one of those things that was talked about. And if you do policy deliveries, I'll end it with this. If you are going to deliver your policies, make sure you deliver your policies. A lot of salespeople get tied down to just production, which is great, but those policies just pile up in their passenger side door or passenger seat, and they don't get delivered, and that's a problem. People wonder where the policies are at. So make sure that you are committed to the process of delivering them, and regardless. So the last point I'll cover here is going wide and deep, and this is called, I call it building a moat around your client. And so what I mean by this is that, again, if you and I both agree that whatever it is that you're selling is going to give you a long-term opportunity to make sales and to continue to build relationships with your clients, what you have to understand is that in order to build persistency and quality of business, what I have found out, and many insurance agents already know, is that you tend to get better quality of business when you have more than one policy in the home. Who has that policy doesn't matter. It could be husband, could be wife, could be the kids, or it could be cross-sold policies. You have, Mrs. Jones has got a life policy but also has a Medicare supplement, and then has a dental plan, and now you've called about an annuity review. They're probably going to want to see what you have to offer, and if there's something you can offer a value to improve, they'll probably do business with you. And so what happens is, as you focus on building relationships with your clients and then focus on helping them in other ways, that lifts the tide for all the boats, all the policies you have. The policy persistency increases tremendously. And so as a general rule, if you want to increase overall persistency, make sure that you go back and see your clients, do reviews with them, ask them questions pertinent about maybe some other product opportunities, and show them other things that you could possibly help them with. And it's likely that you'll find more opportunities to obviously make more sales, but in return, the new sales you make will stick that much more. As opposed to just being a one-trick pony and depending on that one sale to do it, but you could still be a one-trick pony and still have great persistency, because a lot of it just comes down to follow-up, making sure that you do your job to get back in front of the clients, help them out if they have questions, and stay relevant and stay present with them, because they will reward you with more business for that. So to conclude, ladies and gentlemen, on this particular video, if you're still watching this, I congratulate you, because this is actually probably not as hot a topic to talk about as it is to close business. Everybody wants to know how to close business. I think it's the least important. But in the insurance business, it's not what you make, it's what you keep. And this particular topic is really, really important. Again, if you're at this point, probably almost 30 minutes into this video, you obviously understand that this business is not selling vacuums or selling cars or selling a product that's one-off and it's done when you make the sale. You are aware that quality of what you sell really matters, not just in keeping clients so you can sell them more and build a relation, but also keeping that first policy on the book. And that is the crux, that is the foundation, that's the cornerstone of success for the new agent in this business, is you've got to learn how to sell your product successfully so it stays on the book to give you the time to survive, to give you the time to develop cash flow through renewals, as earned commissions, to give you the time to develop that book of business, that clientele, so that you can do these things I said and go back to these people and sell them more insurance products as their needs change. And the thing is if you alter how you sell in a positive manner to improve your persistency on the front end, it leads to all these opportunities on the back end, cross-selling opportunities, referral generating opportunities, everything that makes the insurance business great if you could just survive in the business. So again, this is not a sexy topic to talk about. It's not flashy. It's a bit boring and dry. And I've heard this from a million different people. I'm not the first to talk about quality of business. But as I have been in my 7-year experience in selling some kind of insurance, I can tell you this is the cornerstone. If you're new to this business, if you take what I just told you and implement it in your business, you implement it in your sales training, what you're going to find is maybe the results won't be immediate, but at the 6-month mark, the 12-month, the 24-month mark, you're going to have more people buying from you that already did. And there's nothing better than having people basically hand you their checkbook that says, I want to buy from you, or so-and-so said to buy from you. They don't care about price as much. They don't care about trust issues as much as the cold call will. Your life as an insurance agent will change from the guy who's constantly got to be finding and fighting for new business to being kind of in a farming mode where you're farming new business out of your existing group. And it's a more enjoyable process. And your quality of business is better. You close more of your sales better. Everything is just better about it. So, and all this takes work, guys. It's not easy to do. You may lose sales because you're not pushing as hard, because maybe they just don't have the ability to afford what it is that you're selling, or they're just not a good match. So there may be some things in the beginning that make this not necessarily as appealing. But I promise you, in the long run, if you adhere to these principles, make them a client, sell the need versus the want, premium closing techniques, deliver the policies, you'll get the opportunity to develop more relations, sell more insurance, and just be happier overall in this business. And it is a long-term process. If you enjoyed this video, I do implore you to subscribe to this channel. You can do so by clicking the subscribe button. Also hit the little bell. It's the notification tab. It'll tell you when I'm going live. It'll tell you when I upload a new video. If you want to jump on with me live or after the fact, you'll know I did a new video. Make sure you like this video if you feel like anything I've said is valuable and helpful to you. And then also, if you're interested in learning more about my training opportunities in my insurance program for agents, go to feagentmentor.com/contact. That's my message webpage. You can send me a message. I'll be happy to tell you more about what it's like to work with me and how I could possibly help you out. And if you've got any comments or questions, anything I can help you with, please leave a comment below. I always like to respond to all comments I get, good or bad, and or positive or negative, I should say. So my name is Dave Duford. I'm the Final Expense Agent Mentor El Jefe, and it was good to speak with you guys, and we'll see you probably tomorrow live again sometime in the afternoon. You guys have a good day. See you around. Bye.